a restaurant owner who is going to prison for a $2 million tax fraud. They probably will have to pay this money, all of this money back, plus some fines, plus go to prison, plus be on some type of probation afterwards. And they probably will not be able to start a similar restaurant, probably for some time.
This week's taxi is Mr. Chen. So Mr. Chen co-owned and owned a couple of Japanese and Chinese restaurants in Massachusetts and the other name of the state that I cannot pronounce. But anyways, owned a couple of restaurants. And the funny thing about this situation is, I just want to preface by saying that he was doing his own accounting and bookkeeping, and then he was handing over his financials to his tax accountant to prepare his taxes. Now, what Mr. Chen was doing was he would go in and review the POS transaction. So POS, for those who don't know, is point of sale. That's what it stands for. And restaurants will usually use what you call like a POS tool. Like, what's a good example, Terrell, of a popular one?
So you have
The POS system.
Square.
Okay, yeah. So
Square is
Square.
probably a very popular one.
Yeah. So would use so Square has daily, they'll do daily deposits into your bank account. And they have daily reports where they show, hey, all of the money that your business made and the per by transaction. So what Mr. Chen was doing is he was going in and he was deleting those POS transactions. Now, I don't know if he was actually going into the system and actually deleting them, or if he was deleting the transaction within his QuickBooks or Xero or whatever he was doing. But this is a perfect example of how the bank reconciliation is not matching the QuickBooks account, because if he was deleting those transactions within, like, let's say QuickBooks or Xero, but his bank balance was showing a higher deposit or higher amount of money, that's already a red flag there, right? So he must have just printed out the financials and handed them to his tax accountant, because if I was your accountant and I saw the bank isn't balancing with what's going on in your QuickBooks or in your Xero, what you're showing as your bank balance, like, that would have drawn a red flag. So he was deleting the POS transactions and doing it for multiple, like almost all of his restaurants that he was managing or co-owning. The other thing he was doing was he was paying his employees under the table cash. So of course he wasn't paying FICA, unemployment taxes, those kind of things. But the biggest one was this POS deleted transaction. So
Wow.
yeah. So any thoughts on that before I kind of go into what his penalty is and his sentence?
So, I mean, I think there's so many problems. There are problems on multiple levels on this. I think from a federal tax standpoint, I mean, you're grossly understating your income. I
Of
mean,
course.
that's pretty much what he was doing. Is
Yep.
he was, getting rid of, not reporting all of his sales. So from a federal level, grossly understating his income. Now, also at the same time, on the state and local level, he was probably underreporting his income there, which is not only an income tax issue, but is a sales and use tax issue, which I'm
Yes.
just like, all right, you're now like compounding the problem. You're creating a federal problem and you're creating a state level problem. Um, and
Do you
then
he
oh, go ahead.
actually I was gonna say, do you think he actually wasn't paying? I mean, I guess because it does get confusing to kind of have to cook multiple books. So you think he was just using the same dollar amount, like the same understated sales amount, to file his sales taxes?
Yeah, I think he was. I mean,
Okay.
I believe he was. I mean, and the thing is, this is something that I think a lot of I've seen some business owners, do this, and I've seen some business owners misunderstand this. Is that if you're using a major point of sale system, a POS system, that point of sale system is probably already filing paperwork with the IRS to tell the IRS, we have transacted or we have given this person X amount of dollars. So it's
Yep.
almost like the IRS already knows that your POS system gave you more money. So then when
Hmm.
you fill out your tax return and they can easily look and see you reported you reported $1.2 million for your sales, but the POS says they gave you 2.9 million. Something's missing. Like, hey, there's a gap here. And
Right,
that's
the math
where
isn't
it,
mathing.
yeah, so it's like people don't realize that, like, hey, you're not getting over on anybody. They already know what the right answer is in this case. They're just wanting to see, are you going to be honest about it?
Honestly, it actually surprised me that it took this long because it says that he's been doing it since 2013. So there are a couple of, I guess maybe he kind of, repented and felt bad and didn't do it some years, but it says pretty much from 29 to 13. So they must have known because, like, what is this? We're 2023. He was convicted in January. So, like, I mean, it's been like 10 years. So he must have done something, slipped up or whatever. And I
Yeah.
always find it funny how like these reviews happen like on the cusp of like the 7 year timeline where it's like, oh, 6.5 years. What? Audit, review, convicted, guilty. But yeah,
The thing is, and I think the thing is, there are some crimes that you commit that I think like, I don't
it
think
voids it.
some crimes don't fall under statute of limitation, meaning, like, if you
Oh,
committed some levels of fraud, like, it doesn't matter. They can go past 7 years because
got it.
if it was I think some things, like, if it was an honest mistake, 7 years may be the statute of limitation. But if you intentionally committed a crime and it was some type of fraud, I think they
Mhm.
might be able to go past 7 years if it is that situation.
Oh, okay. I didn't know that. Yeah, that would be that makes sense then. I think one of the other points I want to make before I know you, or actually you had a point to make. You want to make your point? I think there was something else you wanted to say that there were two things wrong with it. One, you shared the first point. What was the second point?
Yeah, I mean, I think the understating of the income from a tax standpoint at the federal level, the state level, and on the local level, sales and use tax. The
Hmm.
other one is you have partners in this business, which
That was the
means
one for me.
you
That
have
was just what I was about to say.
like, you not this isn't just like he's only impacting his own life. Like, you have
Yeah.
screwed over your partners in the business. And it's one of those things that I've seen a lot of business owners go into partnerships with someone. They're like, "Oh, my business partner handles all the accounting," and they have
Hmm.
no idea what's going on. Now, I'm not saying that you should not trust your business partner, but you should have some kind of idea of what's going on. Like, in this case, I think a very simple comparison would have been is for the business partners to be able to look at the POS. What does the POS says? And you can look at a transaction deposit report. That will tell you this is how much money the POS system has deposited into our bank account. And if you compare that to your revenue number, it should be very, very close. I mean, there are
Hmm.
some timing differences in there, so that's why it may not be exact, but it should be very close enough for you to be able to say, like, hey, we've done our part and kind of reported all the income that we need to report. Like, and that's a very simple check you can do, even if you aren't the one responsible for, doing all the accounting or the bookkeeping. Or you can simply just look at the bank balance on your balance sheet and look at the bank statement and see, do these two things reconcile and do they match? If they don't match, then you need to have a conversation with your business partner about, like, hey, what's going on here?
Right, exactly. No, and one of the things that I actually thought about while you were talking is just situations where we found where that review between like the POS system and what's actually getting deposited into the account, we found discrepancies there on the cash side of the transaction. So it's important to do that review. But yeah, so this gentleman is going to prison for 18 months. And then
Oh man.
he's already paid $600,000 of the $2 million that he I guess evaded. So I don't know. He did have a $20,000 fine that he has to pay. Um, but other than that, I think after he comes out of prison after 18 months, he's going to be suspended for a year, I believe, as well. So
Wow.
he's probably going to be required to pay that $1.4 million back, but there was no mention of that. I
I
do
mean,
feel bad for the business partners, though.
because what I would see in this situation is probably definitely gonna have to pay back the rest of the money that he owes.
Mm-hmm.
because based on the way I think the article had it written, I don't know if it was, well, yeah, it did say it was $2 million in taxes that he had not paid. So
Well,
probably
they
gonna have to
did
pay
say
all
to
that.
date. Yeah, they said to
Yeah,
date he
on the
has
federal
paid.
level. Now,
Yeah.
that doesn't mention, because that was on the IRS's website at the federal level. That doesn't mention what he owes at the state level. And
Nope.
then probably because he was underrepresenting the revenue, like his business partners, their tax returns were wrong. So they're probably going to sue him
Hey,
for
it's rough.
restitution and damages, because they're going to have to pay penalties because their tax return was wrong, because he messed up the numbers for everybody in the partnership, and he had multiple restaurants. So
It's a
they're
hard knock
probably
life.
going to sue him.
Mm-mm. Well, I want. Do you think they would get the fees would at least be waived and the penalties would be waived for them,
I mean, I think they can make an argument with the IRS about
whether they
getting
didn't
the
know?
fees waived.
Hmm.
Yeah, I mean, they can just say, "Hey, this guy's been convicted because of, hey, he underreported our revenue and stuff like that." And they could probably get the fees waived and then maybe have a payment plan for paying off the rest. Or they say, "Hey, I only own 10% of the business." So they get their prorated portion of taxes that they're supposed to pay.
Yeah.
So that can be they can work out some type of process, because I think the IRS would work with them, knowing that they were not the fraudsters in this situation.
Or so we think. Anyways, that's your tax tea for this week. Any final thoughts, Mr. Turner?
Yes, the final thought is, thank you everyone for listening, and thank you for tuning in. Make sure you subscribe and tell a friend to subscribe to the show.